today's topic, kind of an interesting one. We're getting more and more questions about this, probably than ever before, is about vacation rentals. So, you know, is it a good investment? Is it not? And so we have a little bit of experience in that, but we also have been around for a really long time and have heard about a lot of other people's experiences. So we're incorporating some of that in there. But we have a couple vacation rentals ourselves and have for, since what, 07?
2006 is when we bought one of them. Yeah.
One of them. So,
well, both, really. One was 06, one was 07. So we've had them for a while.
There we go. So,
yeah.
So we do have some experience in it. And so we're just going to share a little bit about what we, you know, have found, and some of the things that work, and some of the things that don't, and some of the things we thought were going to work but didn't, and some of the things we didn't think would work but do. So
yeah.
anyways,
7 points. We're going to try to cover 7 different points when it comes to vacation rentals today. You know, it's whenever I go somewhere, the first thing that I think about is, I would like to own a place here. Have you ever thought that? Like, have you ever thought,
put that in the comments, guys.
I love this place. Man, it would be sweet if we could own something here. Well, unfortunately, we thought that, and we bought one. Actually, not unfortunately,
no.
But we bought one of those because we had that thinking back in 2006, and lots of pluses came out of that. Some minuses have come out of that, but we're going to talk about that today. So thanks everyone for saying hi as you come on. As usual, great to see everybody saying hello. Welcome to another Tuesday training and vacation rentals today. Yeah. Kind of exciting, kind of fun.
Hey Greg, Tisha.
Really, really cool topic.
Yeah, and you know, the short answer, a lot of people say, like, have you thought of it, Mike? Yeah, you have, Mike. Who has thought about owning a vacation rental in their favorite spot? You know, oceanside, mountainside, cottage, a cabin, a lake, whatever. You know, who has thought about it before and, you know, kind of wondered whether or not this was something that they do in the future or something that would help them in their investment goals, or, you know, put in the comments if you have thought of it before.
Some of those comments are coming in. Melanie says, I have one, so this is a great topic. I know you have one out in Kelowna area there, Melanie.
Gorgeous spot.
And some other comments about Whistler. Every time I'm in Whistler, George says that he's thinking about that.
Right.
I know exactly what you're thinking. In the Laurentians, Jose is saying. So, yeah, I mean, Deanna in France, that would be pretty cool.
That is the craziest
like that.
one.
Yeah.
You know, that's one thing I've never, when we've been in Europe and all over, like, far, far away, I've never thought that I wanted to own one for personal reasons. But certainly for investment, there's been options. But so anyways, okay, awesome. Yep, Mexico for me, nice. I'd like to own at least one. I think...
Yeah, you'll have to go and check on them. Hey, Melanie, that's the tough part about this business, is going and, you know, doing those checks on those vacation properties.
So here's the question. Can we as investors make that happen in our portfolios? Does it actually work out? Does it not? Again, just for those who are jumping on, you know, we've had a vacation rental, like a sole vacation rental in another province for
14 years
13, 14 years. So, you know, we've got some experience there, but we've also seen many people who've gotten into it and gotten out of it, or tried a foray in it.
Kevin
and
says
it's just
Panorama.
gotten really tough.
Yeah. Yeah,
right, Kevin? Panorama. Beautiful, beautiful spot. So that's where we have our condo. And, you know, when we bought it, we were just, that was in our buying stage, and we were just kind of like looking at everything, doing a quick number analysis, and we were like, yep. And
actually,
so we, just
we didn't even go inside the unit because they couldn't get access to it for some reason. I can't remember why. We peeked into the windows. The location, the deck was phenomenal. We peeked into the windows, but we actually never went into it until we owned it.
You know what? Which is could have been another. So we're going over 7 points today of how you can, as an investor, add these vacation rental type places where you get to get a personal perk of using them out of them, but still yet keeping them in, you know, in perspective. So, but that could have been another point. That could have been point number 8.
Yeah.
Was we were in buying mode. And this actually does play into our number 1 point, is we were in buying mode. We were in investor mode. So we bought sight unseen, as we did most of our properties at that time, based on numbers. But yet, our true intention of buying that place was to cover some of our expenses, if not all of them. But really, our true intention was to get use out of that place. That's why we were buying it, because we'd already been going there for 15 years. We loved it there. We knew everything about the resort, the area. That's why we were buying it. So this is point number 1. If you're thinking of buying in a vacation rental, not necessarily just for investment, but because you want to have a personal win in there, a component where you get to, get bonuses personally for this. Here's point number 1. You have to choose. And that's not an answer that most people like from us when they ask, but you have to choose. So what do I mean by that?
So whether it's personal or for investment. So at the end of the day, we have to make that decision as to whether or not, is this something that we are going to get a lifestyle benefit from, or is this an investment? And sometimes when we get our emotions attached, especially to a vacation rental, then sometimes those lines get blurred and people make mistakes. So they'll buy a property because they love the area, they love going there themselves, and they assume everybody else is going to as well. And when you're renting it out by the day, or you're renting it out by the week, or that sort of thing, is totally different tenant clientele. It's totally different setup and property management setup. There's a lot of things that are different. And in a lot of cases, when our emotions get involved in an investment, which is sometimes what happens when it comes to a vacation rental, we don't base it all solely on the numbers. So Tiff said that we bought it looking at the numbers. Yeah, we looked at them, but we did not really crunch the numbers like we should have, because we wanted to use it personally. We wanted to rent it out, but we weren't sure exactly how to go about doing that. How is it going to get cleaned? How are they going to get their keys? How is all this all going to work? So that took a lot of trial and error kind of thing to get that all figured out, right?
Yeah, so we did look at the numbers and we thought we were being good investors is what we were doing. But yet we wanted it for personal use. And we hadn't even been in that unit before we bought it. And we found out that, guess what's right upstairs, right above us in that unit. I mean, this is a building we'd been staying in since it had been built, and every year, usually twice a year, we'd go, and many of our friends come with us. So we have like 20 units in the whole building, and we just go room to room to room. And so we'd seen the majority of the units. We thought we knew what they looked like, but guess what was right above our unit? Was the party room. Right above our unit. And guess what kind of flooring they have in the party room?
It's like
hardwood flooring.
Type flooring.
Yeah, it's a mountainish
And there's
resort.
a pool table up there. Thank goodness it's not there anymore.
They
but yeah, that's where, when the buses would come in and drop off a busload of skiers, that's where they would hang out before they got their rooms. And so noisy. And some of those buses at times were coming in at 2 in the morning and 4 in the morning. Yeah. And so, yeah.
So what's the point?
The
point is that we tried to wear both hats. And when you do that, and we've seen many others do it since, when you do that, things actually don't seem to work out as well. So if you're thinking of a rental or a vacation rental right now, the number one question, the thing you need to decide at the outset is, am I doing this for my personal perks? And if you are, that's great and that's fine. But remember that the numbers aren't really going to line up then, okay? Or
in a lot of cases.
In most cases.
Yeah.
And we're going to talk about how you can kind of make those numbers line up better. Some of the things that we've found that you can do. We're going to get into that. Am I doing this for my lifestyle? Am I investing in my lifestyle right now, or am I investing in money and trying to get an ROI? And you need to choose. So it can be 60-40, that's fine. It can be 51-49, that's fine. But whichever way you lean, that's the way that you have to make your decisions. So if you're leaning personally and saying this is a lifestyle choice for us, this is for our family, our memories, great. Then you got to let go of some of the number stuff.
So here's the thing. If we were buying this property that we bought, so it's a 1-bedroom condo in Panorama Springs building. So it's a great location. But if we were buying this just for investment purposes, our money would have done way better off just buying another place here in Edmonton. Or it would have done way better off just buying in another location other than a resort or a vacation rental type scenario. So looking at that investment out of our entire portfolio, the numbers probably worked the worst out of all the properties we bought. But here's the key. We don't regret the decision because of the personal use we've gotten out of it. We go every single winter. We go every single summer. So
our family uses it. Our
exactly,
friends use it.
And
we rent it out.
Not just us, lots of people we know. Exactly. So the personal benefit outweighs the fact that it was not the best investment decision. So if you're an investor and you're looking for a solid investment, you focus on the numbers only. But here's the key. When you're looking at a vacation rental, those emotions get in there and you start fudging some of the numbers, or you start convincing yourself, well, maybe we can make it work somehow. As long as you're aware, as long as you're 100% aware that this is probably not the best investment decision, but I want a lifestyle decision to be incorporated, then it can be made worthwhile.
Yeah, for sure. So, couple things I saw a question come up a little bit further up. So, Cheryl, you said is an Airbnb. So here's some of the things that come along with vacation rentals. Is some resorts especially. So this, I mean, we can be talking about cabins and cottages and all kinds of things, individual houses, but the toughest ones are often in resorts. So ski resorts, or in Mexico or whatever, they're the toughest restrictions. So Cheryl, was it an Airbnb? No, it was not an Airbnb because they don't let us do Airbnb there. So that's one thing that, when we first came in, actually that is, let me see here, it's coming up, so I'll just leave it. But that's one thing that we learned along the way, is we looked at the numbers and went, yeah, you know what, we can recover some of our costs here. We can, we don't mind paying some. We're paying to come here every couple times a year anyway, so we don't mind paying some. What we didn't realize was, for example, this one it had a rental pool. The rental pool sounded like an awesome idea. Hey, we take all of the rent from all of the units. There's, over 100 units in that building, maybe?
Yeah, probably about that.
So we take all of the rent from all of the units, we pool them all together, and then, every owner gets a check cut the same. So if your unit was empty but someone else's was full, you're still getting paid. And we thought, well, hey, that's fantastic, and so we said, what's a typical pay of that? Oh, well, generally speaking, and you can cover your costs here, was the answer. We found out later what they meant was the condo fees, the strata fees, the costs here, because we were there when we were talking to them. So there's so many things that you have to look into.
So in that scenario, just so you guys are aware, so I see a couple comments. We're talking about a condo that we have owned since 2006 in Panorama, BC, and that's been greatly. We have another one as well, but that's where we got most of our experience with a vacation rental. And we're talking about the difference between personal use or strictly investment, and we mixed those two in this scenario. But numbers wise, we bought it for $160,000, and we had a mortgage on it, and we have all the condo fees, and they have they have lots of fees that go along with it because there's a resort and it's a resort fees and all of those sorts of things. And so when you keep it in part of their rental pool, and this is something that a lot of places sell as a feature, is if you're a part of that pool, you'll get some of your expenses covered. Well, out of the $1,200 a month that this property costs us, with everything included, about $400 of that gets covered if we were in the rental pool. So early on, Tiffany and I decided we're taking it out of the rental pool and we will just rent it out ourselves. And so that was a decision that we made. And obviously there's more work involved in that, right? You're handling the bookings, you're handling the cleanings, you're handling any of the repairs, instead of just the rental pool taking care of that.
So for those who've come on, the first point that we're talking about today is you have to choose. Can you have perks? If you're buying an investment, for an investment, can you have perks personally? For sure. If you're buying it personally, can you have an investment perk? Sure. Mm-hmm. But you need to choose which one it is that you're buying this for. Is it for lifestyle investment or money investment or financial investment? And then make your decisions based on that one thing, so that you can be clear-minded about it. Now, here's a couple things that we've learned, though, is that, if you were to buy in a resort, so we bought in Panorama, BC, gorgeous place. I mean, it's fully booked every single winter, most of the summer, too, I think every summer. But guess what? It is a 2-season resort. So here's a real big key that now when I'm looking at, because Corey's always wanting to buy everywhere we go, and I look really, closely at stuff like that. What I've realized is that the 4-season resorts or 3-season resorts are the ones that actually, the numbers actually make sense for. So what do I mean by that? 2-season resort is winter and summer. A 3-season resort might include fall or spring, doesn't have to be both. 4-season, of course, would include all. So is there a golf course nearby where you're still going to get people coming to the golf course that's playable, through the, early spring and even into late fall that's playable, because that's another key. Is a lot of people will say, oh yeah, there's golf courses, yeah, but they shut down quite early, or there's frost warnings, or whatever it might be. So
what we found,
a 3 or 4 season resort can make all the difference between having fully booked winter and summer. Nothing, literally nothing at all comes in April, May, or June. No.
Yeah, the shoulder seasons.
March, April, May, June.
March, April, May, and then like October and November.
Half and half.
Yeah. And
so 6 months of the year.
And we didn't really think about that when we bought. We thought, oh, well, we could rent it all the time. But who's going to go there when the ski hill's closed and the golf course is closed and the restaurants are all closed? So the shoulder seasons, definitely, we get way less rent, and it's very rarely rented. But here's the key to all of that is that we also want to go there in the summer, and we also want to go there in the winter, and we also want to go there over the Christmas holidays and be there for the New Year's and that sort of stuff. So if we want to be there, that's the time when we can get the highest amount of rent.
3 times the amount of rent.
These are things that you just got to consider, especially if you're wanting to do this because of personal use.
Wine harvest counts as a season. Absolutely, Diana. So that's one thing that when we have looked around, there is very distinctively, if you do want to buy vacation rental and you do want to be able to recover more of your costs out of it, but you're buying it for a personal reason, not just for investment. If you're buying it for investment, I mean, you're looking for a 4-season rental. That's it. That's hands down. You're looking for the best bang for your buck. But if there is a personal component to it that you're getting, you do want to make sure that you're getting more than 2 seasons out of it. So 3 seasons, if not 4, and it makes a huge difference in those cash flows, in those cash flow numbers. Yeah. Have you done a cabin in a park? No, I have not, Cheryl. We have not. But I do know that there's limitations as well in renting things out in certain types of parks too, like what do you call those ones? National parks. Sometimes there's restrictions even if you own it. So that's all something to take into effect. Yeah, you know what? I think, Kevin, you're right. The pandemic is definitely, because we've never had so many questions as we are right now about this, which is why we're doing this topic today. But it does seem to be on people's mind. They can't go far, so they're thinking, you know what? Let's just have a place that we can go to regularly and nearby home.
Most of the people that go to our unit are Alberta and BC people, so they're local. Yeah. It's not full of international travelers. So, if that was the case, then maybe you'd be hit a little bit harder right now. So again, if you decide that you do want to do this, looking for a 4-season resort, if not a 3-season resort, can still work. The numbers can still work. Here's a really cool thing. So there's the first one that I used was called Everbooked, but I believe that it is now merged with AirDNA, I believe. And there's another one called Better Pricing. There's a whole bunch. So what these are platforms. So it's websites that you can go to and you can test out and see what kind of income am I going to get from this place? Who's renting it? How long are they staying for in general, right? So they take mass market information and they break it down into such detail that it's mind-blowing when you look at these things. Like, it really is super cool. So first thing is you're going to choose whether it's for personal or for investment. The second thing is you're going to look for something that has at least a 3-season income stream for you. And then once you find that, now you want to know, what is that area actually doing? So you might look on, Airbnb and go, wow, people are asking $418 a night or $472 a night, woohoo, But look at their vacancy rate, right? And you don't want to just look at each individual one, you want to look at it as a whole. So that's what these sites, Better Pricing, AirDNA. Because if you consider just our unit, for example, when we first started, it took a while for us to figure out the pricing. For sure. And now, after owning it for 14, 15 years, we have all of the return people coming back and returning and filling those vacancies. So we actually don't even have to advertise close to as much as we did when we first got started. And having those over time, eventually you have those returning people coming back every year. That makes a huge difference. So these software platforms, they often charge by the booking. So it's a percentage of the rents that you're receiving. So you sign up, you pay like a monthly fee or a yearly fee with them, and then you also pay them if you're fully booked. Which I had someone say to me the other day, like, well, why would you do that? Like, you're just paying out more and more and more. But let me just say that I looked up some of the stats on it, and they say that, and this is not from these
platforms, this is just kind of out there, that you can make 40% more in income. And here's a couple of the reasons why. There's a bunch of reasons, but I chose just a couple to kind of share with you. So with these platforms, your calendar is updated every day. Every day the platform automatically goes into your Airbnb listing or your VRBO listing, and they adjust your pricing. So it just goes by supply and demand. As soon as a lot of the other Airbnbs in your area are sold out for those dates, the pricing of those nights go up. So again, then you're not just sitting on, you know, you keep it normal. Let's say it's $150 a night. You keep your normal $150 a night. But if, you know, August 14, 15, 16 is all sold all around you, and maybe there's a golf tournament, or maybe there's a birthday party or family reunion, we don't know all the things that are going on, but this platform does. And they all of a sudden will take your nightly rate and go from $150 a night that weekend to $325 that weekend. And it automatically does it. You don't have to know all these things. You don't have to be putting the time and effort in. So you can see how you will make more. We made more money. You can make more money by using these platforms. They say up to 40% more because it self-adjusts. Not only that, when you're changing your calendar on Airbnb, but also all the sites that we've used for many years, when you're changing your calendar on there, it's you're going to rank higher. So you're going to be suggested more when people are looking at stuff in the area. So it's those things that really, really do matter in getting bookings. So that's one thing you can do if you are looking at doing, you know, a vacation rental, is absolutely go onto these sites, Everbooked. Oh yeah, and then Better Pricing, and AirDNA. So, which I think two of those have merged, but. And find out before you get in, what can you actually expect. I'm going to tell one more story of what I feel is super important and so handy in this.
Yeah, Deanna, you made a good point here. Also easier to send friends and family booking link to reduce awkward pricing conversations.
Oh my goodness. So true. We do have a friend and family rate, which is great, but so Julie, do we use Airbnb or VRBO? So for our one that allows Airbnbs, because they do monitor that site and make sure that none of their places are on there, we use both VRBO, Airbnb, other platforms too. But for the one that has a restriction on Airbnb stuff, that one we only use like VRBO and other local sites even, and sometimes even like the Facebook pages for locals is.
We used to use Owner Direct as well, but Owner
Direct, yeah,
we don't get as much through that as we used to.
Yeah. Oh yeah. Okay. So this is the other thing. This is the other reason why I love these. So we had this place. It's a 2-bedroom. Sorry, it's a 1-bedroom. Sleeps 2 people, which is great. Went on Everbooked like forever ago. Looked up and said, like, you know, what are things doing in this area? You know, what should I be improving or whatever? So that one told me that there was lots of sleeps 2 people available, and there was lots of sleeps 4 people available, but there was not, and there's a price jump obviously for that, but there weren't a lot of sleeps 3 people available. And then there's tons of 5+, because then you're going into houses, and I just had a condo. So that was out of my range for sure, but within my price range, what was available was 2s and 4s. There was barely anything for 3s. So guess what? We just added a bed. And just by doing that, and we didn't have to add a king size bed, just by doing that, all of a sudden, we're ranking higher, we're getting more search results, we're getting, you know, because for a little bit more money, people can get that 3rd person in. And so it tells you those little tiny details that, you know, I would never have thought, but I just happened to see in one of their graphs, and I was like, oh, great, awesome. That's the 2 things I was going to say. So check those out, because they're really amazing tools for you to be able to see what a vacation rental would bring in for you. Probably not going to cover everything for you, especially if you want to use it in peak seasons yourself. But,
and especially first getting going, right?
Yeah.
You got to plan your first couple of years. You're going to have way more vacancy as you're building up that clientele that wants to continually come back.
Yeah, for sure. Those are the ways that you can help yourself if you're going to be. So for those hopping on, we just reviewed one. You're going to choose whether it's a personal investment in lifestyle or a financial investment that you're wanting a return on, and then you're going to make your decisions based on one or the other, not both. Are there perks that cross over? Absolutely, but one or the other. You're going to look for a 3-season, if not 4-season booking, because you know, those shoulder seasons really do affect your annual cash flow. But once you get that third season in there, the numbers do start to make sense a whole lot more. Expenses. Okay, so those are some of the things you can do to make, and then use platforms like AirDNA, especially right now, tells you details that you may not have known about how much money you're going to get, how long people stay, you know, any gaps, that sort of thing. So those are some of the things you can do to make it more successful if you are going to do a vacation rental. But here's some of the downfalls. So vacation rentals, you might find, you know, I'm making $500 a night, or I'm making $300 a night, or whatever it might be. But you're also paying 40 to 55% in expenses. Why? Property managers usually charge about 30%. Turnover of, you know, linens, even, you know, we've gone through, I can't even tell you how many times we've had
towel sets and
whole sets of towels disappear,
bring them down to the pool
stained,
and then leave them there, and
even though there's pool towels, still, you know, it's just never ending. Not only that, your sheets, you know, and if you're fully booked, you pretty much have to replace them every season. So, you know, that's an expense too, things like sheets and towels and all that kind of stuff. So your expenses really do add up. You've got your cleaning fees. Cleaning fees, you know, they're making beds, they're doing laundry, they're spending time doing that. So, you know, if, you know, you can't just pay someone to go in and clean for 45 minutes.
And those
or
are the
an hour.
areas you can't cheap out on either.
No.
You know, like hiring a cheap cleaner is not a good idea, you know, because then your guests come in and then they complain and then they're not going to come back, or they leave bad reviews and things just go downhill big time. So, you know, paying for the good cleaner makes a huge difference. It's very, very important to do. But yeah, all of these expenses start to add up. I'm just thinking in the last 14 years that we've owned this property, we've replaced the flooring, we've repainted it, we've replaced the bed, all the bedding many times, a lot of the kitchen appliances and utensils, new hide-a-bed. So all of these things over that period of time, 3 or 4 different TVs, all of this starts to add up, and of course it comes out of your cash flow. So again, that's where you got to weigh the fact that you're going to have much higher expenses in a vacation rental, because you're supplying not just the property, you're supplying everything included in it, right? All the furniture and everything included in it, and
it's
those
different
costs
even than a corporate rental, because often people are on vacation, so things happen. You know, wine glasses seem to disappear a whole lot quicker. I don't know, they get smashed on a daily basis or what. But
good question Donna has: are you doing extra cleaning now in COVID? So you could speak to the one property we have here. You know, we haven't actually, Donna had guests in the property in Panorama since COVID. So the resort just opened up, allowing that, on June 27th. And so we actually haven't had anyone in there, but
absolutely,
But the other ones we have.
So here's the other thing. So we've had this corporate rental for years and years and years. And Airbnb came out years ago and I was like, meh, we're always full. I don't really need to do that. However, last year decided to just do it just to see if we figure out a Tuesday training for it and see how it all works and see if we liked it. And it was good, but at the same time, it gave us the same amount of money that a corporate rental did. And there was way less work, because as a host, you're kind of like at your service, a concierge almost, right? But whereas a corporate rental, you're just putting them in and they fend for themselves. But I'll tell you what, since COVID hit, our corporate rental would have been empty for the last 3 months if it were not for Airbnb. So Airbnb, it has kept it fully full. I think we had just a couple days, if that, I don't even think. So, you know, Airbnb, has it been great? Yeah, now I'm a big fan because it's definitely filled in the gaps. So, you know, that's a good thing right there, just having it on so many different platforms. VRBO has always been a good one for us. Even things like Kijiji, putting it in Facebook groups, just be everywhere, right? But are they doing extra cleaning? Yeah, they are, and we are paying it's only a surcharge of 20% more than what we normally pay for Airbnb cleaning. But yes, they are definitely doing more doorknobs and light switches and disinfecting and all that kind of stuff, sterilizing all the dishes again and all the ones that are used, like the utensils and plates and forks and glasses. Even if they've been washed and put away, they're putting them through the dishwasher and sterilizing. So yeah, okay, people are glad about the replay.
So make a choice about personal or investment. Pick a 4-season resort if at all possible. We talked about the platforms to get your better pricing: Everbooked and AirDNA, and better pricing. We talked about expenses. Count on it being more expensive. Count on your expenses being higher. You definitely have to work in a higher repairs and maintenance. You got people coming in and out. In our case, they're bringing in skis and snowboards,
even though they're not supposed
mountain
to.
bikes in the
and
summer.
There's a ski locker.
And exactly, they're not supposed to, but people do anyways. They don't always follow the signs.
So
yeah, it gets a little bit more wear and tear. So you got to be counting that in when you're figuring out your expenses. We talked as well about rental pools, and they provide a lot of value if you're a part of a rental pool, in that a lot of the work is taken off your shoulders, but they don't really, in most cases, when it comes to a vacation rental. This is different from a regular rental. When it comes to a vacation rental, a rental pool usually does not come close to covering what your expenses are actually going to be. So you want to make
sure of asking about exact numbers. I asked, so does that cover, like, how much of that? Oh, it'll cover your expenses here. For the most part, it should cover your expenses here, which was our condo fees, amenity fees, and resort fees. But he didn't take into account the fact that I had a mortgage on it, right? So, or taxes or insurance. So anyways, just good things to ask and get into. Also, make sure whether or not they allow Airbnb, and that's okay if they don't. Just know that you're going to have to find different platforms. Also, find out if you're allowed to self-manage. Sometimes they won't allow you to do anything but the rental pool. So these are good questions to be asking if you are looking at these vacation type places again. So what about, let's say that 30% of it is your property management fee. So what about managing from afar? That's what we do. Now, do I do it myself? No. However, what we did was we actually bought this with another family member as a joint venture. But what we did now was we brought in another family member. So we're now like a big happy family in that condo, where he rents it out for us. He does all the advertising, arranges the cleaning, rents it out for us, and basically in exchange for having use of the condo. So they go there a couple times a year as well, for a week to 10 days at a time, and he's as invested in making sure that it's working as we are. Like he said to us a couple years ago, like, well, if I don't do a good job, you're going to sell it. And I'm like, oh, interesting. Never thought about that. So anyways, yeah, that's what we've done, is partnered with somebody to take care of all that stuff for us in exchange for having free use of it, which is great. So it's a win for all of us. But can you manage from afar? Absolutely you can. I manage a lot of stuff from afar. I manage stuff from Thailand. But you have to have a good team. So you have to have cleaners and backup cleaners. You have to have a lock system or a key system of some sort to have people coming in and out. Anyways, there's a platform. There's cafes all over the world that will give and take keys for them. So as long as they're coming within the cafe hours, your vacation rentals they'll just give and take keys to and from your tenants. And so it's a check-in service almost like any nearby cafes. I use the one in the Hamptons.
Oh. Okay.
Yeah, for a while. So anyways, there's things that you can do. Can you set it up? Yes. Can that save you 30%? Absolutely it can. It's more work. So depending on your lifestyle, depending on how much time you have, can you bring on a partner like we did, a family member, a friend, someone who's really annoyingly anal at stuff and better than I am at management anyways, in exchange for using the place for free. So is it a win for all of us? Absolutely it is. Is your maintenance partner just equity, or did he submit money to the deal as well? So Michelle, we came in with a joint venture partner, a family member who put in all the money. Or no, actually on that one, we put in half the money because it was, again, this was a personal perk for us. So we put in half the money. She qualified on the mortgage and she put in half the money back when we bought it. We now brought in this other, my brother-in-law, and he didn't put any money in. He just does work. So he's almost like the working partner in the deal because we don't do any work for it anymore at all. But if the property doesn't cover itself and if there is money to put in, we put the money in. He's not a financial piece at all, but he manages it pretty good and makes sure that that money's coming in as good as he can anyway. So self-management from afar, yes. The other key thing is getting someone that will restock. So when you're looking for a cleaner, a lot of the cleaners don't restock. And so that's one of the first questions you want to ask people is, do you restock the unit?
So restocking with like the toilet paper and the paper towels and the dish soap
and all that
kind of stuff. Yeah.
Point number 7. So we've gone through a few points now. What time are we at? Oh yeah, good. Okay. Point number 7 is just remember that in vacation rentals, when we are strapped for cash as a society, that one of the first things that go are vacation rentals. So there's a couple of things that you can do to mitigate that. However, just know that that's part of the deal, is that when things get tough, it's those vacations that go. So there's kind of 2 schools of thought to this too, though, is that the higher the price point that you have, maybe the less implicated you'll be in all of that. But I will say that for what we found is if you are kind of in a little bit of a higher price point-ish for those around you, resorts around you, you get kind of the higher end tenant demographic. They're not as affected as with the ups and downs as well, financially, and they don't damage as much stuff. And if they do, they're more apt to kind of send a message and say, hey, this is missing, that's missing. That was a question I saw that I didn't actually answer. Jose, you said, and Tisha, you said that too, can you charge that to their damage deposit? In a lot of platforms, we don't take a damage deposit. This is the other thing. You have to have cleaners that are going to count your cups for you and count your utensils for you, and recognize if a pillowcase is missing or an extra towel is missing, and then have the care and insight to actually let you know that. So lots of times we'll get there and I'll be like, hey, like, I don't know how many crock pots I've taken up to that condo, and they're just gone. Like, they're just always gone. And I'm like, well, when would that have happened? And my sister will be like, well, last time we were there, yeah, that wasn't, there was no crock pot. And I'm like, so who knows when that happened? The eyes and ears that you have are
so
not.
The cleaners need to inventory stuff at the same time.
But that's a really big ask.
It's hard to get.
We've had many cleaners over the years. Our resort's quite transient, so they come and live there for 2-3 years, and then they go live somewhere else for 2-3 years. It's a lifestyle kind of thing, but it's been real tough. So, and then Jose, you asked, can you not charge stuff to their damage deposit? For one, if there is a damage deposit, perhaps, but for 2, again, it's really hard to, kind of administer all that. For $4 wine glass, we're not going to take the time to do that, because that will drive us crazy and take us out of the investing game, the vacation rental game, I believe. So stuff like that for me,
and probably one day, detail. I would say on average we spend a day a year when we're on our trip, just doing a deep clean on it, or fixing or repairing certain things, and just kind of getting caught up buying new things for it that it needs, replacing certain stuff. So
Costco, when they get their lamps on sale and all that stuff, I'm always But and the other thing is that we have a lot of friends who have said, like, hey, I'm one of them, it's a friend of my brother-in-law's actually, he was like, I'll have to go there and paint it. Yeah,
well, we got a paint job. We just paid for the paint, and he's a professional painter, and he went there and painted it, and we gave him a week a stay for free. So
and it was shoulder season, like it was in a time period that wouldn't have had much for rent anyways, if any, for rent. So anyways, there's so many things that you can do. You do have to get creative, though. We're going to just recap the 7 points of things that we've learned about having vacation properties and rentals, and some of the things that you can do to make it work better, and then some of the kind of cautions and pitfalls that you want to be aware of. So
number 1, make a choice. Are you doing this as a personal lifestyle decision, or are you doing this as a strict investment property? And you're gonna have to be on one side or the other. And like Tiff said, are there perks that come along with it? Like, I'm buying it as an investment, but I'm gonna use it a little bit personally, and I'm gonna get that perk. Or are you buying it personally and you're gonna get a little bit of your costs, or a large majority of your costs covered by renting it out, but it's still probably not the best investment decision. So just make that decision up front and just be aware of which one it is.
And Andrew Jones, I just see her commenting back to Jose about stuff on Airbnb. Andrew Jones, one of our Ignited members, she's here in Edmonton. She's been running Airbnb. She's a super host. She's got crazy, beautiful properties that she ran, and amazing reviews from her guests. So her advice there that she's giving to Jose is absolutely gold. That it's coming from a place of having been there, done that. So okay, so personal or investment, and then stick to your guns, you guys. Don't try to cross them.
Don't let the emotions take over.
Don't let emotions in. Secondly, if you want to do a vacation rental, do try to find one that has 3 seasons in it, not 2 seasons like many resorts have, but 3 seasons.
If at all possible.
Yeah, if at all possible. If you're going for strictly an investment without the personal perks of being able to use it and have that, you know, lifestyle investment as well, then of course you're going for 4 season, and those are harder to find, more expensive too to buy, but you get more rent as well. So, but minimum of 3 seasons. Don't do the 2 season resort thing. The numbers are really hard to make them work. 3 seasons makes the difference. Use the platforms, the tools that are out there for helping you decide before you buy it how much money you're going to make out of it, where there's any gaps in the rental market that you do need. So actually, this is another story. The AirDNA told a friend of ours that, well, investor and friend of ours, that all they had to do was add a hot tub and umbrellas. Umbrellas, of all things. So because they were in a climate that has more rain, I guess, if the Airbnb site sees that there's umbrellas as one of the amenities, then it got higher rankings. It was through that AirDNA that they saw, look, all these properties that we're competing with, only 2 of them have this and this. So they bought umbrellas. And they also ended up adding a hot tub, which they ended up getting way more money for it, but because they saw that the 3 that had hot tubs were always rented out and for way more, and the ones that didn't weren't. So it was like a $10,000 investment, I think, and they recovered that. I think they recovered that not even in that first half season. So use those platforms that are there to tell you where the gaps are, fill those gaps, and tell you what you can expect rent-wise, you know, time-wise, how long they're going to be there, and all those kinds of things. Really, really amazing tools. Yes, you pay for them. Yes, you even pay part of your rent for them, like 1% of your gross rents. They update your calendar for you, which ranks you higher with Airbnb, and they give you intel that is priceless. And they say that you make about 40% more by using these tools in vacation rentals, that kind of thing.
Point number 4 was about expenses. Just be aware that your expenses are going to be significantly higher than just a regular long-term type rental. You're going to be replacing things. Your repairs and maintenance is going to be higher. You're going to have stuff go missing. And you have your cleanings. You have lots of other, and in fact, if you buy in a resort like we did, you're going to have resort fees, and you're going to have other fees here and fees there. And that is just a part of the whole process. So understand that your expenses are going to be significantly higher than just a regular property.
I love, so Stacy and Tyson, they're both Ignited members as well, and doing awesome stuff in central Alberta. So but interesting, she says, what we've got, if anyone has questions with Airbnb, we too have experience. So yeah, I love it. Does a quarter share or another percentage unit make any sense financially? It would depend on the place. I mean, your expenses would certainly be way less, but so would your ability to hit that income. Plus, you also, again, talking lifestyle, you also have 4 other people that you have to consider. So, you know, we did look at quarter share like a few years back now, buying another unit in the same resort. And I think it was, again, it was more a lifestyle decision.
It might make a little bit more sense of a personal, if you're going to use it for personal use, than it would for as an investment, I would think, if you're splitting those shares up into a quarter share.
Yeah, and even like Lori may say, like in a rental pool, it would probably make more sense that way, so that you're getting rid of some of that. But like we said about rental pools, it is really tough to make those numbers work. But if you're getting that personal draw out of it, then why not, right? Like, it's not all about the dollars, right? If
and that was point number 5, really. That was point
decision.
Number 5 about rental pools.
Yeah.
Point number 5 was check to see whether or not you can get out of the rental pool. If you have that as an option, you can likely make significantly better returns and better cash flow if there is a rental pool there. It usually only covers your condo fees or your resort fees or that sort of thing. It rarely is going to start covering your mortgage as well.
And so that's the big consideration is, are you allowed to self-manage? So you can save a lot of money and really change that cash flow number if you're self-managing. But again, in a resort, in many places, they will not even allow you to self-manage. It's either your owner use only, personal use only, or you're in their rental pool, or you're using their management company, or whatever it might be. So before you buy a place, certainly check on that, because that's really important. And then just number 7 is they are one of the first things to go when the economies are hit tough. Vacation rentals, they drop in price. They also drop in like value. But the rents drop and all that kind of stuff. So make sure to give yourself a good enough cushion, and give yourself a long enough time period that you can, have those mortgages paid down. And like our place should be paid off fairly soon-ish. We're still paying like the full mortgage payment toward it. So, oh really?
11 or 12 years left, something like that.
Longer than I thought. But anyways, yeah. So those are our top tips, but number one, by far, that we've seen people make the mistake on, that we made the mistake ourselves, which is okay. We're happy with that mistake anyways, but is choosing whether it's a personal thing or a money thing, and then making your decisions based on that, and then just doing your best to make the other, whatever was the opposite of that, work out as best that you can. But you're probably not going to get both. And so be okay with that. And if you're not okay with it, that's okay. But put your money somewhere else. And yeah, you're going to get probably a better return than in a vacation rental.
Danuja is asking, how does maintenance of a hot tub look like with a vacation rental? So for us, obviously, that's taken care of by the resort. It's not something we personally take care of.
We pay that amenity fee for that.
Yeah. And in most cases, if you're having stuff like that at your vacation rental, you're likely hiring a company to take care of it on a regular basis.
Yeah, very much.
They'll stop by once a week at the very minimum, I would think, and just make sure everything is going okay.
See, like Julie, that's what you said. We want to buy a local vacation lakefront property. We want to rent it out until we move into it, eventually move into it after retirement. Hard to keep the emotions out. Exactly. So that's the thing. You have to make that decision. Like, are we doing this for us? Mm-hmm. Yes or no? Or are we doing it for
And there's nothing wrong with doing it for yourself. It's nothing wrong to make that lifestyle decision.
But you might have to pay for it for a few years before you get into it.
A lot of times what people will do instead is they will get a really, really good investment that is going to give them way better returns, and then take the gains from that and go buy their lakefront cottage when it is that they want to buy it. So just be careful that you're not letting the emotions take over when it's an investment decision. But if it's a personal decision, absolutely nothing wrong with that. And if you can make a little bit along the way to cover that personal decision, then just be aware of which side you're on. And as long as you're aware of it, then you can make a better informed decision, I think.
Awesome. Okay, guys. That is tonight's training. Okay, guys. Enjoy and have a great week. And we will see you over in the later session, guys. All our Igniteds. We'll see you soon.
All right. Take care, guys.
Cheers, everyone.